Let's get further perspective on what it really resonates for growth in the IT sector, perhaps a lack of it looking into the near future. And for that, Rahul Jain, the Vice President at Dolat Capital, joins us on Business at 9. Do tell us from where you stand and looking at these Accenture numbers, this lowered revenue guidance by Accenture. What does it suggest to you about the company and the sector? What's your reading of it, Rahul Jain?
Yeah, hi. Thanks, Vikram. Basically, apart from the results, we also followed the commentary in the earnings call, and what they're trying to indicate, the one positive data that came out was from a order book perspective, but management was clear that there is no change in the discretionary demand or overall client sentiment in terms of their spending. But this order book is more led because they have the right solutioning which the clients are needing. So essentially, what they're trying to say is that this is what is led by their own effort, but there's not much of a change that is happening in the environment. And probably that is the reason, despite a very strong order book, they didn't commented anything beyond the current fiscal in terms of qualitative or quantitative aspect. And as far as even the annual guidance is concerned, they have narrowed it down on the top end by 0.5%. So I think not very easy read through that can come out of this results so far.
Even if you extrapolate some of it, the kind of numbers Accenture is reporting and see it as a benchmark for the Indian IT industry, do you think this is going to set the tone for the sector's growth in the future? Do you think some Indian IT firms will buck the trend even, if you can call it that?
Yeah, I mean, as I said, it won't be very conclusive. People who want to see the positive side of it can definitely look into the order book data and they say nothing to lose, or they can think about no bad news is a good news kind of a stance and kind of play into it going into the earnings. However, as we have seen, the guidance for current fiscal has been very weak for the companies that give explicit number, be it Infosys or HCL Tech. And if they don't surprise positively during the earnings season, all the momentum can gradually fizzle out. So I think it's too premature to think in that way. But yes, no bad news is a good news. It's something what we can read out of it.
But Accenture and TCS, these are the only two big IT companies I can think of that have so far declared revenue from generative AI, and that's the thing of the future. It's a new technology, it's quite nascent, but that's where one expects growth to kick in the future, right?
Yeah, I think there was very interesting remark which the management shared during the call. Apart from sharing the revenue data which they shared have reached the 500 million mark, is that they see there is a significant need of investment to be done by corporates on the digital transformation and other in achieving the right data set and reskilling the people, which is required before a meaningful outcome can be generated out of a Gen AI proposition. So Gen AI, rather being a risk or threat for now, can act as a big catalyst for incremental IT spend in the short term and may possibly become a threat in a longer term basis. So I think from that perspective, yes, it's a positive thing, but we need to see because there's not a significant scale up that has happened so far in terms of capability or revenue across IT player for us to think meaningfully in that direction.
Yeah, so substantial kind of growth, maybe not immediately, but something to mark for the future, especially with TCS going to be the first one to kick off earnings season. And that's going to happen in July. But meanwhile, what are you gleaning by way of IT hirings in this fiscal? Does Accenture's numbers give hope that there could be further IT hirings, especially when you talk about generative AI and the growth verticals?
Yeah, I think if you look at the Accenture data from a headcount point of view, it's kind of up 3% against, let's say, 2 odd percent kind of a growth which they may do. So it's slightly better, but not very conclusive. As far as Indian IT is concerned, we saw that March number were meaningfully lower from a beginning of the year perspective. So I think even if we see a weaker revenue number or a modest order book number in Q1, but if we see some kind of an uptick in the hiring during the earnings season for IT services player, then that could be seen as a decent leading indicator. Because in the recent past, what we have seen is that despite a very strong order book, not ramping up of the orders on time was the reason of key disappointment. So more than order book, we would look at the headcount addition. So far, from Accenture, we may see a slightly better thinking, but as I said,
Yeah.
very difficult to conclude.
Well, difficult to conclude, but the market seem to be liking Accenture's numbers. If you see the way the stock is responding right now, a rise of anywhere between 6.5% and 7%, and we'll see exactly what it does in the future. Rahul Jain, many thanks for joining us on Business at 9.